So do you know how to share your screen?
I see the green button.
Okay, yeah. So you could just share. We could just go over like what you did the last time anyway, like the balance. You kind of went over the balance sheet anyway, and then the
Okay.
cash flow and the income statement, and
All
if
right.
you address how to use seasonality. Okay, I could do that after that. And the economic modes, I could do that as well.
So the okay, I hit share screen. I've never done it before, so I hit share screen.
So have the
Got
screen
it.
that you want to show. If you're concerned with privacy, I would say like go to exactly to what you want to see first, and then click on share screen.
Oh, okay. All right.
Yeah.
Hey, Mike, you know how to do it?
Yes, ma'am. Tell me what you need and I got you.
Oh, okay. Just go to any balance sheet. Go. Where were you at last night? This. Where were you at last night? I mean the other night. What? Kind of hard to.
Be in one of the
That
on
was
any balance sheet, like you can go to bar chart or somewhere.
yeah. I was about to say actually, you could just go to bar chart. Actually, not think about it.
Yeah. Go to bar chart and pull up the pull it. You can pull it up there because I'm totally lost. I need to learn how to do this off.
Yeah, because you're gonna be a mentor soon.
Only if, only if my accountability partners say so.
She stopped trying to buy stuff that's not sticking to the script. She can learn how to share.
Ooh, shots fired. Shots fired.
Every session. Okay.
Okay, I'm gonna stop.
It's accountability
I gotta come for you. I gotta get you in order.
That's okay. That's okay. Being an auditor, you know how to take it. You got thick skin. Okay.
Yes.
Okay. All right. Just in the essence of time as it's coming up, we're going just a quick summary or just a top level view of the balance sheet. I like to start there first because that's the essence of a company. The balance sheet will reflect what the company owns, what the company owes, and what the company has left over. So what Mike has up there now, and again, it's the formula for a balance sheet is always assets, what the company owns, liabilities, assets minus liabilities, what the company owes equals owner equity or net worth. That's down there at the bottom, shareholders equity. So real simple, assets minus liabilities equals shareholders equity. What the company owns, what they paid out minus what they paid out, whatever they have left, that's what the shareholders get to split up. Okay. On a balance sheet, what the company owns, it's broken out in all those things that the company can liquidate within a year. Those are called current assets, and you can see them all there. Like I said, they can sell them off in a year, real easy. And then anything that takes longer than a year to get rid of, they're called long-term or non-current assets. Okay, and those are the things there. And so those are all your assets. Getting to liability, it works in the same way. The current liabilities, go ahead, Nadine.
Yeah, my question is, what are some examples of like non-current assets and just regular assets, or does that matter?
Oh, okay. A non-current asset is going to be buildings. It's going to be very hard to get rid of a building, corporate building, liquidate that in a year. It's going that in there it says intangibles, and that's usually the goodwill, branding, things like that. The things that good name, the company's good name, and as it says, long-term debt. You got a mortgage or you got a 5-year note. You're not going to be able to get that liquidated in a year. So that's, those type of things are considered long-term. For, I'm sorry, go up to assets again, because that was, go up to assets. For not, again, non-current, it works the same way. Investments, because usually time they have like bonds, multi-year bonds. So it's hard to get rid of those of not having a penalty. And like I said, the intangible would be things like goodwill, branding, and things like that. And then on this one right here, PPE net, I don't know what that is. And then your other, that's sometimes you have to dig into other because you don't know what it is. And sometimes that's where the juice is at. So does that help, Nadine?
Yes, it does. Thank
Okay. All right. And so liabilities are what they owe. And again, you have the ones you can pay off. They can pay off within a year, which is your normal utilities, rent, insurance. That's where you're going to have your accounts payable, payroll, just those things that come up and they're just on a rotating basis that you pay in and out. They pay in and out within a year's time. And then the non-current one is going to be anything over a year. That's the cutoff. And again, that's going to be your notes and maybe some loans or maybe like leases. You have a lease. They have a lease on a building, a fleet, anything, and it goes over a year. If it's substantial enough, it could go down into, it's for a long time, over a year, it can go down into non-current liability as well. And then the last thing is the, just so you know, and this right here is a little more advanced, deferred revenue that they have on there. Revenue is always income, but sometimes they can, let's use Tesla. Say for instance, like, remember when Tesla did the $1,000 deposit or $1,500 deposit on the S3 or something like that? They had people, you can go order a Tesla and you put down $1,000 deposit on it. But they already knew that Tesla wasn't going to be ready for possibly 2 years. Well, all those $1,000 deposit would be what they would classify as deferred revenue, meaning that it's something that Tesla earned, but they haven't been able to put it on the books yet. It's not really theirs yet. It's like a long-term deposit. So they can't really, they owe it. Tesla was giving people refunds if you didn't want it. But so that's what that is. Just so if you see deferred, anything deferred is anything that's been pushed off. And if you see it up there with the current liabilities, for the most part, it goes from a 1 year, more than 1 year, up to 1 year. Up to current, meaning that it's going to be taken care of within that year. So, okay, I wouldn't go any further into this than that. And then down at the bottom, again, they have things, they own it, they pay off all their bills, and whatever's left, the remainder is shareholders' equity, meaning that's what we all get to split up based upon how many shares are out there. For the most part, this is really getting deep into it, but you have different classifications of shares. You have common shares, you have preferred shares. We, for the most part, are at the lowest rank. We buy common shares. So after the preferred people, after they get paid, after your bondholders get paid, if there's any other money left over, it comes to the common shareholders. Retained earnings. When you see retained earnings like here, you see retained earnings, sometimes what corporations will do, if they're really good, they will hold back a portion of their earnings for future projects. It's like investing. They're investing in themselves. So you'd have to go and look at their financial statements and read some of the notes as to what they plan to do with that money in the future, but they will restrict some of the money for future projects that the board would have approved in their board meetings and things like that. Other means you go dig it up. If it's a large amount, it's substantial, then it behooves you to go find out what it is. But if it's not, just let it be. But you can always, at a very high level, just rest assured that whatever category that amount is in, that figure is in, it holds the identity of that particular category. Of the three category, whether it's assets, liabilities, or shareholders' equity, whatever number fits in those three categories, it carries the identity of that section. Assets, that's a plus. That's something they own. Liability, you see a number in liabilities, oh wow, they owe somebody. And if you see something in shareholders' equity, that means that's what's left over. So I wouldn't do any more than that unless somebody has some question. Oh, okay. No question. Let's go. You can go to the income statement. It's all right, Tao? Tao?
Yeah, yeah, that's fine.
Okay. Real quick, income statement. The income statement, whereas the financial statement is attributed to the essence of a business, the income statement is attributed to the operations. If it's an ice cream truck, the income statement is going to tell you how the ice cream truck, how they run their business as an ice cream truck. Okay, so this one here is run. I mean, this is broken out a little different, but I always say that you have sales, all your money coming in for your sales. Okay, and that could be sales. You'll see it sometimes. Excuse me. You'll see it sometimes identified as revenue, but it's sales. Okay. And then in order to sell a popsicle, you had to get the things to make the popsicle. So that's going to be your cost of goods. What is the cost of that item in order to that they're selling to put it together? So once you back out the cost of goods, then you have your profit, but that's the gross profit at a very high level. But after that, after you get gross profit, then you begin to back out those expenses, things such as all of the, say for instance, I'm gonna use the ice cream truck, the gas, the maintenance on the truck, paying for salaries for the, for the guy who's driving the truck, the ice, all that. And if they took out a loan, the interest, I'm seeing right here, the interest. Okay, but sometimes, so all of that is backed out of the gross profit. But then sometimes they might rent that ice cream truck out to somebody else and they pay them some little side monies or something like that. And you'll see other income. So that is attributed to something that has to do with sort of a side hustle. So that's on there. And all of that is rolls into pre-tax income. You'll always see where you'll have operations before taxes and operations after taxes. So that's what you have there. I'm looking at it. Let's see. Income tax. Well, once negative, it's a negative. They didn't make any money. Minority interest. That's something I don't know. And it could be many different things. That's something worth going to check out what it is, because that's something odd. That's something unusual. Why is that there? So, and it is being deducted. It's being deducted. So in the previous year, it was being added. So that's strange. So that's something that you can, you go and figure out.
I think the minority interest, I just Googled to confirm. I think that's like if some other company has a stake in there.
Okay.
So that's what it said on here.
That's what it said. Okay. All right. Okay. And then at the bottom of this statement, you have the earnings, the 862,000, the negative. It's split. Everybody understands earning per share and how it's divided out based upon the share outstanding. You're just dividing that number against the shares outstanding. And it could be any of those numbers. It could be gross profit. I mean, just anything divided by shares outstanding gives the reader an outlook of what each share, what part of the company each share it represents. That's all that is. That's what that is. Oh, the what do we call that last time? EBT, EBITDA, EBITDA,
EBITDA, no,
Yeah,
you corrected me, but I say
Keep
EBITDA.
it up.
EBITDA.
Give it up. Give it up.
Yeah, yeah, that's earnings before income tax. What's the D and A? I don't know everything.
Depreciation.
Depreciation.
Depreciation and adjustments, right?
Amortization.
Amortization.
Okay, all right. Depreciation, writing down buildings, amortization is writing down notes, intangibles. Okay. Cash flow, that's the easiest one. Cash flow statement is just looking at money coming in and how they're treated. Cash coming in, all the different adjustments to that cash, all the all the adjustments to that cash and what they have left over. We always want to see a positive number at the end of the day. And then they have it breaking out by operations. They will usually have it by financing activities. You can scroll down. They have all, each section of the company or each department of the company is broken out. Operating activities, cash flow. Ooh, this is good. Who is this? They got 2.4. Yeah, again, you
They
want to
got like
always have that
2.4
next
billion. What company is this? Oh, that's Tesla.
million. That's million. What is Tesla?
Mhm.
Wait, is that billion or million? I don't know what the number.
million.
They usually tell you. So,
That's,
FYI,
no,
when
that's
you on
million.
these
That's two.
oh, sorry. I just want to say, like, FYI on these sheets, there's usually like an indicator that let you know if these numbers are in thousands, millions, or well, not billions. That would be crazy.
Yes.
um,
Oh, thousand.
Values in thousands. Okay,
Okay.
so that's million.
Okay, so add 3 more zeros. Yeah. Okay. So again, like I said, the top part is the operating. So at the end of the day, that's what they have left over. The cash flow for operating activities. And that's good. It's positive. It's very good. Came up from negative. The investing, that could be if they, like I said, they issued, remember Tesla issued some more shares. They issue more shares, they can issue bonds, they can buy back repayment, they could buy back. So you can have notes, those warrants and things like that. So all of that would be cash coming in there. Let me see. When they had those stocks issued, debt repay. I'm thinking about Tesla, you guys, and looking at the numbers. Okay, also they got some loans too. Okay, so the financing activities and then, oh, okay, they got some, okay, well, that makes sense. Exchange rate effect because they have businesses overseas. So they're accounting for their, the dollar, and fluctuations in the dollar. Notice that the beginning cash position and the ending cash position equals the operating cash activities. One of the things I brought up last time was that, okay, I'm sorry, it's one other thing down there. One other section, free cash flow, okay. So the operating cash flow minus capital expenditures, that factory in Austin. I'm not saying it is, but it could be. And what they got left. So they got about 1 billion. 1 billion circulating. Okay. It's not bad. All right. But one of the things I brought up last time was that you have 2 different reporting by corporations. You have GAAP, which is generally accepted accounting practices, principles. I always get that P mixed up, but that's a set of rules that all accounting in the United States must adhere to if they're going to be recognized under the guidance of that governing body. If they're gonna be a CPA, you definitely have it. Yes. Somebody said FASB?
Yes.
Yes. Yes. Then you have non-GAAP. And non-GAAP is sort of like other. It's sort of like other, but your reliance should always be on GAAP as opposed to non-GAAP. Non-GAAP has a social or a ethical weight to it, in that no corporation should be putting out false information. However, with GAAP, there's certain rules in accounting, how certain assets, liabilities, and owner equities, how it must be reported, how it must be treated. So that is the difference. Whereas with the non-GAAP, they're still going to do it basically the same way, but there's more leeway that they can use over there. But so that's the best way I can explain it. So that's all I had. Unless somebody had a question.
Good job, Patricia.
Is that Shimon?
Yes.
Oh, thank you. Thank you. I get a pass. I'll tell you what I did later on, but I get a pass. Thank you.
For now, we'll talk offline.
Just FYI, next time I'm gonna need to see some faces. We're gonna be on cam, like we family, you know what I'm saying? So but was that fine for everybody? Everybody need anything to go over? Oh, I think
Yeah, thank you.
something about it earlier. Oops.
If you have questions, please ask, guys, because these
Yes,
are the,
please ask. If you don't want to
these are the
say,
experts.
then type in the chat if you just don't want to talk. But next time you have to talk. Like this is more about just growth and not just the stocks, but it's about growth in like so many different ways. I'm challenging my group to get on stage in Clubhouse and ask their questions instead of me asking the questions for them. So this is just about, to me, the come up is about being on the come up in so many different ways.
I definitely agree with Tayo. And to be quite frank with you all, literally, I really prefer being behind the scenes, but I do see the value and the come up is worth coming out of those shadows for. Even if it's not that you're shy, but you just like being in the background, it's still worth coming out.
I'm a green bubble cousin, so I can't ask. Wait, what do you mean? Like,
Android.
Android game. Android.
I know. Right. I'm sorry. So I apologize. I completely forgot about that.
Y'all got to get one of those iPads.
Yeah.
Man, Tail said everybody got to be on camera at least, but I don't even see you, Tail.
right.
It's
want to call them out,
it's
Mike.
on now.
Hold on. Who said we need to get an iPad? The way my 70-30 is set up is not allowing it right now.
Tax write-off.
Facts. I'm with that.
Tax write-off.
I got one for Christmas because I'm with the Android gang, but my daughter bought it.
Maybe next year. Or maybe my birthday.
That's next week, right?
Well, maybe my birthday, which is in June.
Okay.
So what I want to kind of just go over with everybody is kind of like what things I look at when I'm researching. We kind of went some of these things on the last one, if you look on YouTube. But I think Twitter is a really good source of information to use. So the main people I would say to follow is like, because like I have a good understanding of technology. I mean, I'm a little bit more tech savvy than the average person. However, I still don't know the intricate details of like a lot of different sectors and industries. Like for instance, I understand software, but that doesn't mean I understand which softwares are like the best that cloud services are using. So sometimes it's just best to like follow people that talk about cloud software on Twitter. Like Hypergrowth is one of them. He does research into the software as a service. I really like his breakdowns. So this page, so like, I don't want to go through too much because I know everybody's going to get excited for the in an hour. I don't even know what do you call it? The Trader Avengers. I mean,
Mhm.
but so I just want to go, but like you could definitely use this Twitter to your advantage as far as just being in tune with what's going on and like find like some sites. I mean, some accounts you could definitely follow. I'll just highlight real quick. The Street is a very good one.
Mhm.
Turn the notifications on, follow the page and turn the notifications on so you just be aware. Stock semi don't fall for the hype, but they kind of sometimes break some stuff down really good. Benzinga is another one. Stock Dweebs. Definitely should follow Elon Musk if you're definitely in Tesla or ArcPlay because he likes to tweet things that can cause some stuff to yourself. So this person right here is like, that's my holy grail right here. So he just tweets out like high level news instantly, like it comes before the news. Like,
Hey Tayo, can you send a list of the ones that you think are great, and I can also add it to the toolkit, or we just have a place for them?
yeah. Actually, what's dope about everything is somebody named Joshua. I think it was
Oh, you put it in the link already.
Yeah, he put all of that in the Google Docs page. So he
Okay,
put
great.
some of them on there. But yeah, we could do it. Definitely do it. Yeah, I could definitely do that but I'm pretty sure he put it in there. So
No,
moving
I'll check it and then add it to the toolkit so it's centralized
okay.
in one place for everybody. That's not a problem.
Okay, cool.
Tayo, so I opened the Twitter after you told us about this. I think it was last week, and it is so addictive. Something else I'm addicted to now.
Wait,
And
don't blame me for that.
oh my God, it's so addictive. I'm like, I have so many addictions now. Clubhouse, Twitter, my goodness. Did you give us Elite Options Trader? Is that one of them?
No, but that sounds interesting.
Because whoever this person is Elite Options 2. And he gives out information all day, and it's very it's Elite, ELITE.
Oh, Elite. I don't know why I thought you said Leap. Okay.
That's that Southern drawl.
Okay. Did I? Nope, this wasn't me. I'll have to look through it, but this might not be bad. Wait, are they like giving out plays? Are you trying to get into
Not necessarily plays, but just helpful information about the different stocks.
Okay, cool. Yeah, definitely.
You can always look at the charts when he give it out, I guess, to see
and validate
what is. Yeah, that'll help in learning. But oh yeah,
wow, this is an actual real gem that he just tweeted right here. Just random. Sorry, just caught my eye, but this is actually, if you see a high probability setup, why not wait for that setup? It may occur 25 to 30 times. If you put 2K in each time that setup occurs, you can make 50 to 75.
Wow.
So that's just one of the things it's kind of like goes towards, if you have a trading plan for how you enter trades, stick to it. Don't deviate from it. That's when you detach the emotions. You don't let the FOMO get to you. You just see a trade, you see the setup, and it looks like a setup that is always, 8 times out of 10, it has a good risk reward ratio, and it's always hitting, right? So when you understand that, you should definitely make sure you stick to that. Stick to your script. Stick to your script means so many different things. Stick to your script and your trading plan. Stick to your script in your methodology of how you enter trades. Stick to your script and being disciplined. I think at the end of the day, like if you're disciplined, like discipline equals freedom. So it's a good audio book about that as well that you can listen to by a former military Jackos or something like that. But it's really good. It's on Apple Music.
So Taya, do you have a trading plan, just a trading plan in general, or a trading plan for each individual contract that you go that you enter into?
Wait, is it no? I don't have one for every contract. No, I don't have. I have. Well, I guess technically I do. I have notes as far as what I'm gonna do with every contract, if that's what you're asking.
Yeah.
Okay, yeah. So I have an idea, broad overview in my plan. Oh, sorry. Of like what I'm looking at. I do have that, like, so I have an outline of like stocks that I'm looking at, and then I have them kind of color coded as far as like, okay, this one is what I really want to get in. This is what I would get in if this doesn't work out, and then this is like third best. That's if it just I have that identified. If it's like the setup is just perfect, then that would be the one I'll get in.
Well, say if you purchased a an Apple contract, and it may be a year Apple contract, and for your trading plan, you say, I will exit this contract once it reaches 300%. And so you purchase this contract in January, and maybe by April, you're at 300%, hypothetically. So since you wrote in your trading plan, I will exit at 300%, do you literally exit at 300%?
Like you're trying to catch me up in a
Because you know everyone stressed the trading plans, and I know I'm awful with sticking to.
So
I'm gonna exit at 300%.
So for me, it will be 300% with an asterisk, if I would say, and that asterisk would say something like 300% if it's only around 300% at this date. If I get to 300% sooner, then I'm not gonna exit, of course, right? I'm gonna just let it keep riding because I'm more time sensitive than I am target. Because it's more so about time for me. So if I'm in a trade that's for 2 years, if I'm in a 2-year leap, then I want to exit by this date regardless. So I'm going to hold. I mean, technically, it's funny because Mark did that today, right? He kept asking, I forgot whoever the first person was, but he kept asking, I think it was Michael or Marcus. But he kept asking, what you gonna do? It was basically, the whole point was basically saying, the whole point of that whole exercise that Mark was doing was to see that you just stick to your script. Because if you think about it, Mark had that same type of scenarios this year, right? He had a major drop, and what did he do?
He stuck to his script.
Exactly.
Hey there, I got a question. So I feel like there's some gaps in my my learning and on making a decision, right? So I know that when we're picking a play, you want to look at the company, you want to make sure you're not buying at the high. Then you can go into bar chart, look at the 2-year performance, calculate the strike price, and then you get a value, right? And then once you pick your value, you could even look at that specific strike price and date. That has a chart. You can put the Bollinger Bands and you could try to time it at the bottom, right? What other things are y'all looking at? Because that's really all I'm looking at. I'm not really sure how to use the Quiver Quant or how that factors into my decision. I'm not really sure how to use what's the other thing.
So that's the stuff you're doing before you even think about getting into the trade, right? So the Quiver Quant is for your research. So you're looking at the stock and you're looking at Quiver Quant. You're looking at the investor press relations,
wisdom,
the balance sheet, the financials, because you want to make sure you have a great idea. Like trading is about having great ideas, and for you to get great ideas, you need the data to back up the great idea, right? So you need to be able to say this company is growing, it's consistently growing, it's consistent, it's profitable.
Mm-hmm.
The management is there, the leadership is there, and they have an edge, right? And then Quiver Quant you can like get other biases by saying, okay, do I see any politicians involved with this company?
Mm-hmm.
Do Do I see any major institutions involved with this company? Do I see any, do I see them buying a lot more shares? Are they in their top holdings? Those are the type of information technically you kind of want to like just also have jot down, because it just helps you create a better story for that stock. And
Okay.
then in turn that becomes a better idea.
Okay. And then once like, so for the 31 picks, right? We know that most of them are great companies. We've seen the analysis that the cousins have put up on the Facebook, and all of that, right? So once you determine, okay, I've done the fundamental research, I know it's good, I've picked my strike price, et cetera, what are the things are you looking at before making a decision? Or is it just, hey, I've got my strike, I know my date, I'll just go ahead and execute and make the play? Or are there other things you guys are looking at? Like, I know seasonality is one of those things, like this.
Yeah.
I just want to make sure I'm looking at all the right things before I just go and execute. That's kind of my thing.
Okay, so let me try to do something real quick with a company. Is we could just try VFC, right? Might not see nothing on Twitter. Maybe you might. Nope. I don't think this is going to be useful for that. But let's see. So you'll like maybe, oh, actually, you know what? Maybe we should look at, well, so they completed acquisition of Supreme. You can kind of go over this real quick. Then you kind of look up and see what Supreme's history has been, right? Because it's really about like, you ever watch like these little superhero shows and they're like investigating something and it leads to like another investigation, or like actually not superhero, like a lawyer show or something. Something leads them on this
It's like
path.
a trail almost, right?
Yeah, like a trail. So you just want to follow every trail. In a sense, you kind of have your own type of like one of them boards that's up with like something in the middle and it's like string all over the place. You kind of technically doing that in a sense.
Okay.
So what I'll do is I'll have like a sheet up and I have like notes taken down, like VFC, sort of news about the acquisition. I would look up and see how Supreme is doing. I'm a little older, so I don't know what Supreme and is. Apparently it's hot though. Apparently it's luxurious. Apparently, I have no idea, but you could look up the news and just see how this relates to, because what this would do is kind of help you kind of understand that this is all contributing to like the kind of the moat, the edge that this company has. And then so when you go from there, then you go to like, okay, presentations, you go like investor day, presentation. You're still on, okay, that's still on that. So then you go look at the PDF. I'm gonna try to go through this really quick. And then so this is the kind of stuff you want to see. Like this is ton of stuff. Like this stuff would be like, okay. Ranked number 1 on social metrics, 21 overall. Okay, you'll jot that down. Number 2 in consumer durables and apparels. And then so technically I would probably have to look this up too, because I don't know what these are. I gotta make sure that these are top. Well, I think if that's Barron's, like the news Barron's, then okay, that's dope.
Yeah, Barron's is legit.
Yeah, okay, but this is the type of stuff that I would want to look at, like 50% overall. Oh wow, 50% of overall representation of women in VF's workforce. That's really that's good. So for me, I feel like if a woman's in the if there's more women in the company, I just think overall that company's gonna do better. Just this history, and from what I've just seen, from what looking at it from like a gender, like looking at it from a equity standpoint. When I look up stuff about, this is like politics, but like when I used to look up stuff about companies, when women are involved in companies, they tend to do better. Women as CEOs, those companies tend to do, they tend to outperform most of the time. So that right there would have been like a good point for me. Just me personally. Not, I wouldn't say use that same metric, but that's what it would be for me. So then you will scroll down and you will like Timberland. Okay, so you know how Timberland's going to perform. And then Just kind of want to go through the update.
Yeah, in addition to what he's looking for in here, like if you were gonna go into QuiverQuant, you would see that they have a lot of different contracts with the government. BF Solutions does a lot of uniforms and stuff. That's one of their subsets. So you'll see that they have, you know, a lot of other revenues that are not just seasonal sales. So I know they get a big kick in seasonality because, you know, it's cold, people need jackets. But you can also see they have, you know, a good steady stream throughout the year. And in addition to pulling the trigger, the only thing I would suggest is looking at price history for the contract that you're looking to get. Because even though the stock might be at a low, you want to make sure that the contract price that you're getting at is at a low.
Mhm. Yeah, so I get that part. I'm looking at bar chart, looking at the chart, and making sure the price history. But is there anything else that I'm missing, or am I good?
I just want to show this real quick. So, as we see here, they lost some revenue. And of course, you kind of associate that with COVID, right? Of course, you could say, okay, this is from COVID. But then you can also see that like they were getting some more sales revenue with the digital. So then you'll probably say maybe this will start picking up, especially this is wintertime. So like that's the type of thing we want to link it because we know Timberland, North Face are pretty big, right? So of course sales might be down. It makes a little more sense. Sales might be down too. Q2. So this is Q2. So that's probably what, like June, maybe I think. So or no, like March. So I could see why this would be down. But then I would look at this and say Dickies and say, okay, that's pretty nice. So then Dickies is definitely keeping them more afloat. These are some top brands too off rep too. So that would be another reason why I will be looking at these companies as well. Just because I know Vans as a skateboard shoe or whatever, like the people love this. The youngsters, you know, the teenagers, the skateboarders. We know North Face is pretty popular. Timberland, that's New York all day. Detroit all day. I mean, black people wherever I know they at all day. Dickies. I mean, everybody. If you work in a factory, or you work anywhere, carpeting, I just know people wear Dickies. So that brand recognition is just something that would make me more confident in VSC.
All of their brands have some sort of a code file.
Yeah, thank you for putting that, Mike. Yeah, the way you put that was perfect. Plus 10 BPS, basis points, operating margin. So that margin went down though, but okay. So overall, I mean, personally, this would be a trade that I would say will rank probably like more third for me personally. But because of the seasonality factor, I would be more inclined to still get in this because of the fact that this is around wintertime and people were buying a lot of stuff. And that's the stuff we got from like the data from like Adobe and Shopify. People were buying a lot of stuff. And so then for me, from that perspective, I would be thinking that a majority, I'm pretty sure a good amount of them will probably be Timbs, you know, some North Faces, maybe even some Vans. So that would make me say I would get into this trade from that. And then what you could do is you could go to stock charts or equity clock. And then as you see here, that they downperform in October, they downperform in May, in November and December, January till about April, they go on a good consistent amount of run. And just to make this make sense to you, so this is taking the data from the last the last 5 years, and this is like the percent of months in which VSC closed higher than it opened. So meaning that it closed higher than it opened for that month. So as we see here, most of the time they close higher in March, June, July, September, November. But we see they definitely don't in like May and October. So what that would tell me is that getting into December, I kind of get in a little low point, and then I'm gonna get like kind of ride the wave, and I can expect a sort of a drop in May. And then so if this was a leverage play, then that would tell me I would get out in May. If I'm getting, depending on the contract, if I'm getting a year out contract, then I will probably more than likely I mean, not May, if it was, sorry, let me not confuse y'all. Because I want to make sure y'all stick to the script too. But that would just tell me that I can expect to still stick to the script, and I could decide maybe to make it more compact, I could maybe decide to either get out in June or maybe get out before May, before it starts down, before it starts going downsizing. So does that make sense?
Yep, thank you.
I'm sorry. Yeah, Patricia?
I had a question. Is somebody else? This Patricia. We're going back to the plans, and you said that you were looking at 300. When it was time for me to set up, when I wanted to get out of the plan, just insight to my rationale, every option I bought it with the expectation to stay until 6 months, until the expiration date. And as far as the percentage, I was thinking like, well, okay, all I keep hearing is 500%, 500%. So that's my goal. So I have no plans to get out before that time, unless I'm talking about Apple, ARC, XLK. I mean, you write it out. I mean, but you said 300. Is there?
No, that I was just throwing. I think somebody said that number to me actually or something, but no, I'm not saying you have to wait for 300% at all.
Mm-hmm. But do you have to? Well, I understand if something like that one, VFC, that's a seasonal company,
right?
But for some of the other companies that are just tech, whatever, you just ride it out. Does that come into consideration?
I mean, you can. Like, we can still see and look at Apple. Right, we can still see and look at Apple and then see how Apple performs all throughout. And we still see that there's still some times where they still open lower than what they closed at.
Okay, all right. You don't have to go there because I was in the essence of time. I got it there. I'll check it out.
Yeah, and I'm just saying that as far as like you could plan which trades you're gonna do that month by that. So like let's say if this was a plan. So we saw what VFC was, we saw what Apple was. So this would tell me that I want to get in an Apple on one of these downtimes. So corresponding to like quarter witching, I guess in a sense, the best times will look to be around like maybe beginning of April or June or September. So then you could say from then your next trade would be with the next trades you'll get, okay, so then you would say I would get in my next trade for my next quarter trades, VFC in May.
Okay, all right. And that's considering if you have a constant influx of money, your budget. If you got a constant influx of income, you're contributing to, you're saving, putting away. Because if you just got a set amount and you've just invested that set amount, then you wouldn't necessarily be going in and out.
Well, it depends, because you could technically have the amount that you have ready for trading, but still wait until your strategy plays out, right? You could say you could have like the amount of money you want to put total to your trade already, and then say, well, I'm just going to use this amount for this trade first, and then I will use this trade for the next trades.
Okay. All right. I get it.
Does it make sense?
Yes. I got it.
Okay. I just want to show a few more things y'all can look at and use to research. Google Trends is one of them. I think I've shown on here a few times, like using like looking to see, and it's just mainly about search. It's just another way of just kind of seeing what's going on with because typically I like to think of like if people are searching more for it, then it's probably selling more, So that's kind of how I kind of use this. So, and it just kind of breaks down like what's being searched more. So as we see here, AMD looks to be searched more most of the time than NVIDIA, except for this month, for September. in August. That's kind of interesting. I would probably, and then what I would do honestly would probably be like
What site is that, Tayo?
Google Trends.
Google Trends?
Yeah,
Okay, thank you.
you're welcome. And then so that because it would just make me think like I wonder why they were getting searched more. You know, like they had is there a reason for it? So then I would like look and see what was happening. And then so right here we see Google announces, I mean not Google, but NVIDIA announces the GeoForce event for September 1st with rumors, and that's around August, and you know kind of corresponds with okay. So that's probably what was causing them spikes that NVIDIA had. And then going from there, another site too is you could just use, I mean, everybody knows QuiverQuant. I just like to use Visual Capitalist. If anybody looks at these slides, you will notice that it looks like some of the slides out the way it looks visually, some of the stuff that Mark has used before, right? So, oh, this is the one about the dollar. But this, I would say definitely subscribe to this. They always bring out some really nice metrics. And this gives you a really good understanding of like what's going on in the world in general. And the more you just understand more what's going on in the world, then you kind of be able to tie things with other things, right? You'll kind of get, like for instance, I was reading an article and it was telling me about how the emerging markets are booming and how they've been outperforming and they've been getting a better return than the States. And it's suspected that they're going to do even better next year. So what that's going to tell me is that China might be, and then China doesn't even have a COVID situation then at all, then I can expect China, while we have some downtime with our economy, that China's businesses are going to do probably much more better than this, right? And then the same thing with India. If you're looking at emerging markets, you can say the same thing, like looking at what's going on with India, looking at the world. So, but just looking at this, so this is about emerging developing economies, advanced economies, looking to how they've been impacted by COVID. So these are just, you know, just some things that I think that you can like really look at to kind of get in response to the Chinese. I haven't looked at this, but that was kind of interesting. But yeah, so this is a site that you could use to really look at stuff. Also, if you're not subscribed to ARK Invest as well, dope, you know, definitely subscribe to them. They always have a lot of good performing stuff. Reminds me, on Twitter, you can also follow all the analysts at ARK as well. And they always are dropping like just breakdowns of what's going on easily on Twitter. So that's another component I forgot to mention. Another site I like to look at is, oh no, this is something that runs up. But this is a website if you ever wanted for like 20 key financial ratios that every investor should use. Renzo dropped this the other day. So you can definitely look at this if you want to get like a better understanding. Basically, if you just want to know, at the end of the day, is a higher number better or is a lower number better? Like you want a higher return on equity number, right? But you want probably you want a much lower number when it comes to price to book ratio. So, but this is just something you can look at too, just to help you out, like to understand what the ratios actually mean, and like what area in the spectrum do you want them to be? Do you want it to be a low number or a higher number, right? So I could drop, if y'all want, just ask for me. If you don't know the website, just let me, I'll send it to you. Actually I'll put it in here. I can post this in, right? Yes, okay. Another one is, this is something about just general economics. So I believe Renzo dropped this as well. This is pretty cool just to read about what's going on. Another site.
Not on that trading economics joint.
I'm sorry, what? So this one, what they do is they kind of analyze earnings, and it's kind of like insightful and stuff. Like I was reading like long time about how it talks about the earnings and like how they've been mentioning ESG like a lot more. they've noticed that it's been mentioned so much more. So just putting this, this is a good way of like kind of getting familiar with like how certain data is being processed by other people and like giving you an insight on like what they're thinking about what this means for the future. So another good site you can look at and read. And I guess I could show y'all this too, because some people wasn't here for this, but I really like this site. As far as information, I think it has an app as well. I definitely think you should download the app. It's like one of my favorite sites to use. Gives you a good morning brief, an afternoon brief, or evening brief. It has news, high level news, so you don't have to like read a bunch of big articles. It just breaks it down for you. Like it will tell you, and it will also tell you like too, like during the day, like Square shares are trading, but there's no real news reason why it's trading higher. So it's really, really useful. Give you morning news, like I said, so you can read it before the market opens and see what's going on. So I would definitely say if you have the capability for it, to just download the app and use it, I would say definitely use it. It's one of my favorite sites, honestly. I can't stress that enough. Oh yeah, yep, and you can connect your broker to it. Yep, your broker's account. Yeah, Chioma. Yep. Another site I showed people last time. This is almost just like Atom Finance. They just don't have a mobile app, but they have some really nice other stuff too. So like here you could like look at the top news. They'll have like a Twitter page on the side, and it just, I don't know how they pick the people, but they just, show you all their tweets. You can see the trending news, the latest news. You also like do some charting on here too. You can do some financial analysis. What I really like about it is that it will really show you what's going on during that day. Like it will just put it right there in front of your face. Like it's right there visually, you can understand it. The gainers for the ARK ETF is Baidu, Materialize, MCRB, Twist, and then the losers is Pinterest, PagerDuty, DocuSign, Shop. And you go look at here too, it shows the same thing too. So it shows you what's been getting a lot more volume, what's been getting a higher return. So we see here. So I really like this site as far as with that. You could just, yep. What's up? Does somebody have a question?
What's the name of that one, T?
Oh, this is called app.koifin.com, or I think you just type over here. I'll just put in the chat. Please remind me to do that. I keep forgetting. Okay, use Koifin. Okay, cool. Look at the graphs. Financial information too. You can even like, I like the way they lay it out. So if you want to like compare, it's really dope because it kind of gives you like this little green, which is nice because you kind of could tell there. Oh, okay, good. Oh wait, bad. So I just like the site. If you just need something that's a little bit easier for you to understand, cool. I think I went over. You could do some analytics too. You could bring up. So this is like the NASDAQ, and it's gonna bring up like a whole bunch of charts. This stuff is just called launches charts, but and then.
Yes, you did.
Also has like economic calendar, so I'll let you know what's going on for this week. I think that's it. I think that's really all that there is to say from this list. Yeah. I think this is it. This is just a watch list that I didn't create these. Oh, you know what? I should show you this on Atom Finance. I didn't even think about this. Well, Adam Finance has what I really like too is they have this like screeners page, and what I like about it is, I mean, premium microspace. So if we look at like software and service, it's really just easier just to visualize like, oh, okay, like this is the average contract value per customer, and so as you see here, Live Person, Medallia are getting a lot of high value contracts. I don't know if anybody's gonna keep that, but annual current revenue, annual recurring revenue. So it's just nice. I like data to be presented like this. I don't want data to be just read. I hate it like that. I can't digest it that well. But when it's like this, it's so much easier to digest, like the net revenue retention rate. So these are just things I would say you should definitely, use to your advantage. Unfortunately, they don't let you put your own apps, or I just haven't figured out how to do it. I mean, your own stocks in there, but they just bring up some off rip.
Are you paying for that, or are you just using the free value of Adam Finance?
I am using this. Paying for it is $9.99 a month.
Okay.
I am not. I as soon as I got on here, I think I fell in love with the site and I just paid for it instantly. So I'm not sure if this is I say premium. It might be premium then.
They do offer a free service.
Yeah, they do. That's what
sign
I'm just
in.
trying to know.
It gives you 30 days to try it out.
Oh, okay.
And it doesn't give you all the features, of course, that the premium does, but I mean, it is a good site for the premium.
And then X-ray, you just type in anything, and I swear I think they're like just doing I think this is like an AI, and they're just like completely scanning the entire as fast as possible. If you want to find anything, like you really can just type in, and it will just come up with just information for you to read too. So I like this. I think this app, them two sites, I just honestly think you could do a lot of research with just those two sites, honestly. Let's see, what else could I go over? Hey, Vanessa.
Hey, sis.
I think we kind of went over a lot of stuff. I'm trying to think, was there anything else that y'all can remember that we went over the other day that we didn't mention?
Nah, you pretty much touched everything, covered everything that we did the last time.
Okay.
Hey, I got a question.
Yeah, what's up?
What is the mindset that you have when you're looking at all of this information? Like, if I, because one of the questions that I've been asked from a couple of people that I got following the Come Up series, technical analysis, I think I can understand, and that's easy to explain. But when it comes to fundamentals, what are you doing when you sit down in front of a computer and start looking at this information? What is your mindset before you start to research a company, a ETF, or anything like that?
Oh, I mean, it's kind of like what Mark was saying. I kind of have been thinking like, man, who's gonna get the money? Who's gonna be the winner? Like who is doing something that's gonna be so impactful that it's gonna make a mark on the world? Like, and then if it's not that, I'm thinking about more so like, where do I think the world is heading? Like where are we heading to? And that's why I say like you kind of have to like read about like a lot of general stuff, because you're not gonna get that from just always reading specifically from like CNBC or anything else. Like you're not gonna know if you're not being in tune. Cybersecurity is gonna be a big deal. Like cybersecurity is gonna be something that we all need to be. It's gonna be a concern. And so once you understand that cybersecurity is gonna be a concern, who is going to perform in that sector? Who's doing something in cybersecurity that's going to be game changing? And that's typically what I'm trying to look for. I'm trying to find, and when you hunt for that, when you kind of like understand like what's going to be impactful to the world, you kind of just need to figure out then how is it going to happen and who's going to make it happen.
Cool. Appreciate it.
And also, if I can piggyback with Tayo's point earlier, you want to know, what's the business, is all about, like for example, we all know McDonald's is flipping burgers, but they're mainly on real estate business. If you look into their business overview, also, what's their what's the company structure, also their financial health. Those are the things that you're gonna be deep diving in if you're really interested in the company, and also the future outlook. All those things is gonna be correlated if you're doing your fundamental analysis. Yeah, that's just about what I do whenever I look into a company.
Nice. Yeah, Renzo. Yeah, Renzo. Don't sleep on. Yeah, don't sleep. I like the way he be coming with information. I was like, oh, okay, I like this guy right here. He dropping some gems. Okay.
Oh yeah, Renzo think he's sleepy. He's trying to hide in the corner and stuff.
Yeah, I feel him. He just want to be in the back.
I'm only here on the sideline. Don't worry about me.
No more sidelines.
All right.
No more sideline, man. I can't wait to see what your group gonna be like, man.
Oh, wait, what?
Your Minty group.
Oh yeah.
Why he on mute?
And he covered his mouth.
It's already started off with fire. It's already started off with fire. Come on, my brother.
Yeah,
So if I may, it sounds like, just to recap, you start with the broad overview, looking at what's going on in the world, thinking about the future. So maybe this site, visual, the site that just was on, will let you know what's going on in the world, and you can kind of pick up an area, like you said, cybersecurity, and then you start going down that rabbit hole of cybersecurity, and then you start looking at the players, the companies are in that space, and then you start looking at the fundamentals of those companies, and then once you find a good company, then you start looking at the technical analysis, and then start looking at your options play.
Yeah.
You break it
Okay,
down.
man, like that. You broke it down.
I'm just trying to bring it all together for everybody. Bring it all together.
Yeah.
Exactly. That's exactly it. Like when I started thinking about what I was kind of looking for, I just was open minded. I was like, okay, what's going on with the world? And as we shut down, I'm thinking about, well, we need something to make us faster, more proficient. I was reading something about how like a lot of people realized that when the COVID, we thought our manufacturing supply chain was solid. We got proven wrong. We got proven wrong. So when companies realize that, they're thinking about how do you get better at that? How can we get more efficient with that? Like I work in the auto industry, and I remember when we shut down and we came back on, we had the hardest time. Like we've been missing shipments. We're like, like this is for cars. So when you realize that, like what do companies need to invest in to make that supply chain just work way better, exponentially, you got to think about what's going to help that happen. And that's going to be artificial intelligence, robotics, like there was a time with robotics. I think robotics is a little bit harder because sometimes they don't know exactly what they was picking up. So you got to really program. But there's been breakthroughs, like I believe like some people at Berkeley, where before when they pick up, the robot didn't know if it could pick up if it was picking up something hard or soft, and how to be fragile. So it would take I believe I'm a little off, but it could have been 20 seconds before I had to decide what to do. And so at that point, you're thinking that's technically slower than a human. That's not really efficient. But then some researchers that I think is Berkeley figured out how to make it faster, and now it does that in 80 milliseconds. But a lot of that's done by AI, machine learning. So once you realize that, then you got to figure out you want to look and see who's been doing the work in the machine learning aspect, who's doing the work in the AI aspect.
Yeah, that kind of falls into the Mike Tyson quote. Everybody got a plan until they get punched in the face. 2020 pretty much punched every company in the face and made them, check themselves. So that's also what you want to look into when you're looking at a company. Renzo actually made me debate my own position, which made me second guess my position and look into other stuff. So that's also something you want to do when you're looking at a company. Don't just look for the good. Try to find the bad, because if you could find the bad, then you'll understand if it's really worth your investment, and also if it's a safe investment. Because even though we're looking for those gains, you want to make sure that they're coming to us, consistently. You don't want to get surprised, or if you do see it and you see that it's coming up, you can prepare with a pivot or a possible move, or understand a time frame.
I don't need the Patricia. I'm sorry. She making me shit. I don't want to be punched in the face. It's just weird because she got my mom's name, so when she say stuff like that, it just throws me.
No, I thought about what Mark has been giving us a heads up that 2021 is not going to be like 2020. So when Mike said 2020 punch the companies in the face, I'm like, oh man, what are we in for in 2021? I know we're prepping, but still, I don't want to be punched in the face. I just don't.
So one of the things that Mark likes to have people do is if you have a company that you are very bullish on, he likes to have you create the bearish case for it and not just find out, oh, what are the risks that are on the Zacks report? Like really go out of your way to try to convince someone not to go into that position. Because if you can defend that type of argument, then you know essentially that it's a good position to be in. It's a good company. So I would challenge you all to do that. If there's a company that you're just really, really, and I've actually had the opportunity to hear some people really give some nice bearish arguments on some really good companies. So
Ooh, give me one. What was one company?
So there was a very nice bullish argument on Tesla.
Okay.
Bullish argument on Amazon of all companies. Amazon.
Wait, bullish or bearish?
I'm sorry, bearish. Very good bearish argument on Tesla, Amazon. What was the other one? Adobe, which was weird to hear. So I mean, I would challenge you guys all, if you have a company that you just really love and you think it's the greatest thing ever, try to find reasons why maybe it's not so great. Not so much because you want to talk yourself out of it, but if you can find out those pitfalls and those landmines, you can prepare yourself for it. Outside of that, what sources would you use to find more? So outside of Zacks, I would look at the company's 10K and 10Q, particularly the 10K, because the 10K will actually tell you, hey, these are things that we're doing, and these are the things that we're quote unquote afraid of. These are the things that we're working on. These are people that we're afraid of, who we consider our competitors. So the 10K will definitely give you a good sense of maybe some things that you want to be aware of for that company. So that's another good source outside of Zacks.
And to piggyback on what Vanessa's saying as well, if you go back to the episode where Mark did on a Saturday, he did the bull versus bear case for Tesla. That was kind of like an insight to what was to come, except now we're going even in more depth for it. So I think that that's a good episode for you to watch as well, especially if you haven't been privy or able to really listen in on the Clubhouse, where he's been Let's Play a Game, and he's actually challenging people to provide the bear or the bull case.
Okay, that's what I thought. Amazon got like a lot of debt, don't they?
They
they make a lot of money though. They make a lot of money. That's
but they reinvest their inside the company. That's why it doesn't show on their net income.
I would say honestly for my bears, because I think Mark did say the other day, he was like something they're everywhere, but I was like, well, not really everywhere. They're not in China.
They're not even in the Philippines.
And they're not in Mercado Libre. Like Mercado Libre's there. Like there's some other companies that's like definitely, and they can't get there. You know what I'm saying? Like they kind of lose the edge in that area when you think about it. And then another thing is like, I think Amazon started to lose a little bit of share when it even comes to like the cloud. I think like people are starting to think about like
Microsoft is creeping in.
Microsoft is starting to gain some traction on there. You know what I'm saying? So it's just that's the type of stuff you just learn, because like you're not gonna know that from like Amazon. You're gonna know that from like learning more about Microsoft.
Yeah.
And then you link that back to Amazon. So
And then I would even say maybe think about the things that you like about a position or about a company, and look at the flip side of it. So if you say, I really, really like that you can go online and you can buy everything from Amazon. Well, if they're solely online, that means they have a lack of physical presence, right? So maybe you look into how that impacts their business, right? So how does their lack of brick and mortar stores impact their business? I know they have a couple of brick and mortar stores. How are those stores performing? Are they making money? Are they losing money? So stuff like that. You kind of just have to think, you have to dig a little bit deeper than what you see on the surface.
Mhm. Yeah. Wait. So,
Hey, time check. You got 10 minutes.
okay. Okay. Wait, did y'all want me to play the bull versus bear? Oh, this is 19 minutes long. This is 19. Yeah, this is like 10.
No, I think he's just putting it there for
Okay,
reference.
yeah. Okay, let's put it. Okay. But yeah, like exactly what Vanessa said, like it's all like that. Like you need to just you get familiar and then think about what she said. She said she flipped it. Those are some things too, because they've been making a lot of debt, they've been making a lot of investments. For instance, they're gonna get into this healthcare, right? But what if they don't do well in healthcare? You know, it's already in that space. You already got CVS, GoodRx. What if they don't execute properly? You know, like what is there to guarantee that they are going to be successful with Health Lake or in their prescription program? You know, so you could say that it could be harder for them to get in that space. Of course, I mean that's still hard to say, really. I mean, it is Amazon, but at the same time, it's still, you know. I am curious, how have their grocery stores been used? I would have came back at that physical. I was like, I don't think you would need a physical location as long as you could have a physical distribution center location. But
Well, I know they have Amazon Go, which is their grocery alternative to Whole Foods. They have like some freestanding bookstores. Apparently, they
still
do
sell
like
books?
pop up. Huh? Yeah, they
I'm
still
sorry.
sell books.
I said they still sell books.
They still sell books. They have some brick and mortar bookstores. They have like kiosks. They have some kiosks in malls. But I don't think they make a whole lot of money off of it because there's not a lot of talk about it. That's why you don't hear Amazon talking about them. Like they exist. But
I felt
I
like
don't.
that was always more brand than actually trying to make sales. I don't know. That's how I always felt about that. Yeah.
Yeah, get the brand recognition out there. I could see that.
Yeah. So.
They also own Fabric.com. A lot of people don't know that, but Fabric.com actually supplies a lot of the carpets for a lot of commercial spaces, as well as I would say residential customers as well. That's one of my clients. And
what if we're moving to hardwood floors? What if a lot more companies are moving to hardwood floors?
the crazy thing is, if you go to Fabric.com, they actually have a department for that, and it's literally Amazon.
Look at that.
Shut me down.
You shut it down quick too.
Right.
You know, it's crazy because I was looking at a YouTube with Kathy Woods, and she was talking about how they do their research, and that they were leading into communal research, how hedge funds are looking to share their research with, you know, communities like us, so that we can digest the information and get, you know, go through it quicker, better, and share what we find and they share what they find with us, you know, so that we can each learn from each other. I thought that was good, and this is a perfect example. Like,
wow, that's actually really
Diana,
brilliant.
you turn on the camera, you got on the mic, like you drop it in.
For that video, Mike. I'm gonna need the link for that video, Mike.
Uh-oh.
That's brilliant. Yeah, it's just, you really have to try to think really outside the box. Like I remember reading about how, like, you know, when most people think about the car industry, they just think about it from just like the car, you know, not having to use horses or carriage anymore. But it was like, but that's not really the entire complete story. If you think about it, the car industry also put in place fast food. You know, like the car industry put in place being able to go on road trips, which created tourism. There's so many things that came from the car industry that it's like, you're like, oh, wow, you really got to think like you're some type of like crazy detective trying to find some serial killer from like 10 years ago. So like you really have to like put pieces together that you just wouldn't even click at first. And then, so once you try to think, like I really be trying, it's hard. It's not that it doesn't come easy. It just comes from like just keep trying to practice at it. But once you get that down, like then you'll start like asking yourself questions that you'll be thinking, it's crazy. But then you'll Google it, you'll be like, oh wow, and then you'll just be on a rabbit hole. 6 minutes, looks 6 minutes till 7, looks like for Clubhouse. What y'all think is gonna be like tonight? What y'all think is gonna be? I hope we get some. I want people to ask some fire questions, man. Like,
man, it's gonna be. Should I go with stocks or ETFs?
Wow.
I'm sorry.
It got real dark in here. Yes.
Yes.
We have all asked that question before. I'm sorry, I didn't mean it like that. But I'm just saying, it's probably gonna be like that.
I know. I feel you. We just be ready for the more crazier questions. You know.
Have you guys ever checked out ticker symbol U on YouTube channel?
Actually, thank you for break. Yeah,
it goes deep down into the brain of like art. You know, he sheds a lot of light, a lot of information there. Check it out.
Yeah. YouTube is a good resource as well. Like you could like you know, so how like some people like they are just long-term investors, so they really just break down like companies. Like they go deep dive in because they're more so investors long-term. So they'll break down things and they might even come up with some stuff that like some information that you just wouldn't even have known probably. So it's really cool to just check out some YouTube channels about stuff. That's actually when I first even saw somebody talk about when Neo was gaining, was talking about Neo getting the battery service and then doing like the wall service too, you know, the home wall service, and it was possibly going to be subsidized by the government. And then so, you know, that was just what I kind of got in from Neo. I was thinking like, oh, okay, that's kind of interesting. So it's just those type of things, you know, you get on there. There's also another thing y'all can do too, but it's lengthy. But y'all can read a lot of insight data from like a lot of data analytics sites, but it's going to be like very heavy reading. Like,
do you have some sites to recommend to us?
Well, Renzo dropped like how many PDFs was that? I'm not even halfway through, but he's
the research reports.
Yeah.
They're a little bit more than just research reports. Yeah. But there were research reports in there too.
Yeah, I think I dropped the UBS Future Outlook from Morgan Stanley. I think I have like 5 of them. I'm still reading. It's a lot, but
this was the
itself. You're gonna learn a lot. You know, like the global economics.
Yeah.
You will see like what's gonna happen. Might gonna happen.
You're gonna leave. You're gonna leave feeling like you're a mark.
Mm-hmm.
Yeah, we need to go ahead and pull Renzo to the stage.
Yay.
He's killing me with this covered his mouth.
No.
Let me see if I can find the link. I'll post a link in there for you.
It's already happening, Renzo. It's in motion.
But for the people who's asking for the link, I'll just post it in the group. Anytime, maybe you can just spin it. You know, it's
I want to, because there's some people that's not in the group, so that's why I just want to post.
Or maybe I can just post it on the FB page, on the Facebook page.
Oh, well, you can do that too.
Yeah. All right. Okay.
And I'll just post just in here just in case, but that's one. But yeah, it's a lot of dope stuff that he had put in here. I only have read like I think I read like UBS and Credit. Before.
Credit Suisse. Yeah, that was good.
Oh, I didn't have this. All right.
Time check.
Hey, we only got one more minute.
All right, so yep. This is gonna be recorded. This is recorded. I'm gonna send this out. So yeah. Hope everybody got good value out of this. If there's something that wasn't clear, just you can always message me. I'm always down to help. And yep. Can't wait to see everybody in a year and a half, and we're sipping on. Well, no, is it? Well, I don't know when it will be, but 2 years. So, all right. But I'm gonna post this on the YouTube and in the Facebook group. So everybody should.
All right, yeah, that'd be good.
Okay.
Bye, guys.
Thanks. Bye.
Thank you, everybody.
Thank you.
Yeah.
Thanks. Bye.
Thanks. Bye.
Thank you.
Thank
Appreciate
you.
you guys.
Bye-bye.
Thank you.
I think Jolene is on Clubhouse.
You sound quiet.
Did they start it already? Oh yeah, they did.
Yeah, I think so. I'm just taking some stuff off, copying some.
I wish I could
information.
sing. I would sing that song.
You can still sing it. You don't have to know how to sing.
All right, let me.
But see, now I don't know more than just the